Hello! Welcome back to my channel. Today we're going to go over all the different types of traders and what their differences are. So we have scalpers, we have day traders, swing traders, and long-term traders. Right after this quick little intro, I'm going to break them down and yeah, let's get into it. Scalpers will hold trades a few seconds to a few minutes in the market. They're in and out really quick. Their general plan is to grab as many pips as they can, as many times as they can throughout the busiest time of day for trading. Generally, scalping strategies, because they're in and out of the market really quick, they're not catching many pips and they enter frequently. Traders who scalp are usually people who have quick reactions to the markets. They have really great instincts and they're quick-witted. They don't dwell and they don't hope. If you're a scalper, you're somebody who is able to pay attention to your charts and watch it move every second of every day, or at least during the busiest times of the trading market. If you're someone who's like me, who works a 9-to-5 and is trading on the side, I wouldn't say scalping is for you, because you'd have to have time to look at the market, and the busiest times are usually during New York and London sessions. Next, we have our day traders. Day trading is suited for somebody who works a 9-to-5 and who can look at the charts a few hours out of the day, back test, do some homework, mark up a chart to see where it goes, and then put a trade in, put a stop loss in, and there you have a day trade. Day traders typically don't hold their trades overnight. It's just held during the day. Usually they enter at the beginning and they close out before the end of the day. Day trading isn't as fast-paced as scalping, but it is one of the more quicker trading personality strategies versus the swing trader or the long-term trader. Because trades are made during the day, they're not really affected by news. If you day trade, you are in and out of the market during the day. So say if there was a major world event that happened after the market closed, you would be safe and out of the market. It doesn't really affect your trade because you're not holding it overnight or over the weekend. If you trade Forex, then you could get out of it if you are trading overnight or holding it overnight, because the market would still be open 24 hours during the day. If you were day trading stocks, then you wouldn't be able to hold it overnight. Our next trader is going to be the swing trader. Swing traders usually like to hold their trades for several days to several weeks. They are trend followers. These traders, due to whichever circumstance they have, aren't able to focus and look at their charts and markets throughout the day. So instead, they focus a few hours out of the day marking up charts and predicting where it's going to go, and trading for a few hours and then coming back a few days later, a few weeks later, and closing out their positions unless they have a stop loss or take profit input ahead of time. Swing traders will use technical analysis and fundamentals. They may pay attention to some news, but based on your strategy and your belief, they can either include news events as part of their predictions and analysis or not. Position trader or long-term trader. These traders will hold their positions for a few weeks, to a few months, to a few years. To be a long-term trader, you need a vast amount of patience, because your money is going to be locked and tied up into your trade or whichever position you're in. Alright, so now we're going to get into trying to help figure out which kind of trader you are and would be best suited towards your personality and trading style. You can demo trade and figure out whether you're better suited towards being a scalper, a day trader, swing trader, long-term trader. I do recommend you demo trade paper money before you actually put your real money in it, so that way you can figure out which trading best fits you, it's always good to prepare. When you do figure out which kind of trader you are, stick to your trading plan, stick to your trading style. It's not a good idea to change up your trading style when you're live trading with real money, because you could blow your account. When you demo trade, you can practice being a scalper. If you find that it's too stressful and it's too draining on you, then maybe you switch to day trading, which is the next one over. And don't put too much time into looking at the charts and the markets live, because the market's always going to be there. You do need sleep. So whenever you have the time, say after work, before work, on the weekends, look at the chart, back test, and figure out which trades you want to enter. So to summarize, scalpers will trade anywhere between a few seconds to a few minutes. They don't hold their trades for very long. They are comfortable with trading fast-paced, they're quick-witted, and they're in and out of the market multiple times a day to accumulate as many pips as they can during the more volatile times. Day traders will trade between a few minutes, hours, up to a full day, maybe two. They generally don't hold their positions overnight. They are also comfortable with being in and out of the market. They have a little bit more patience, I think, than scalpers do, because they are willing to hold their position for a longer term versus getting in and out of the market. So now we get into swing traders. Swing traders will hold their trades from a few days to a few weeks. They are much more selective with their trading. They don't spend as much time watching the charts as day traders and scalpers do. Their personality type would be, I would say, more calm and more focused. Last, we have our position traders or long-term traders. Again, these traders will hold these positions from a few weeks to a few months, maybe even a few years. They are very, very selective and specific with their trades. The trades they take are very systematic and very planned out. They've spent a lot of time researching and looking at the charts to figure out whichever stock or currency they're looking at is going up or down. So these four trading types are the main trading types. There are two others that are going to be an honorable mention. They're the algorithmic trader and the event-driven trader. Algorithmic traders will rely on programs and computer analysis in order to place a trade. Some people are smart enough to program their own codes and algorithms themselves. I do enjoy looking at the charts and trying to figure out what's trending and where the market is going to go. So if you're smart enough to do that, then consider me impressed. There's also an option to buy a product that already exists. I'm not aware of any product. I don't recommend any product. If you're comfortable with using technology and having those programs on your charts, then you would probably be best suited as an algorithmic trader. Me personally, I think it's better to place your own trades and mark up your charts and back test.
Always back test.
Do your own work and due diligence to figure out whether you should buy or sell a stock or currency. If somebody had the holy grail to trading and computer program that was 100% accurate and knew where the trade was going to go 100% of the time, then everybody would be making money, everybody would be buying that. But because that doesn't exist, as far as I know, I would do your due diligence and always be careful with whatever program or signal that you're buying. Event-driven traders will look at fundamental analysis over technical charts to make their decisions in the market if they want to buy or sell based on it. So these event-driven traders will look at major news events, say, for example, elections, non-farm payroll, major world events, political events, economic events. these cause the markets to either go up or down, especially in Forex. If you're the kind of person who enjoys the news and enjoys keeping up with world events, then this trading style would probably be better suited to you because you're already knowledgeable about what's going on in the world. Especially if you know how it affects the market, then this could be very beneficial to you. As an example for myself, I lean towards day trading and swing trading. I don't, especially with creating this YouTube channel, I don't find myself having a lot of time to look at the charts and backtest because of my 9-to-5 and because of my side hustle pursuits. So I look at the charts and backtest and do homework after work and on weekends. And then when I enter positions, I'm not in and out of the market. I will try to hold them overnight. If my stop loss gets hit, then I'm either sleeping or I'm at work while it happens and I can't look at the chart to close it out. That's why stop losses are very, very important, as well as take profits. Well, I hope you guys enjoyed this video. I hope it was very, very informational. If you have any questions, leave a comment. If you like this video, like and subscribe. If you have any suggestions about any future videos that you'd like me to maybe do some thorough research and put into my next video, please let me know. I'm more than happy to do that. And thank you again for coming to my channel. This is Tina with the Ninja Traders, and happy trading. Bye!